Afternoon, everyone. Thank you. Afternoon, everyone. Really good to. That felt like the ref in a football match, didn't it? Blowing the whistle 5 seconds too early because the final advert hadn't finished. Afternoon, everyone. Really good to see you all. I hope you're enjoying the first 2 days. This is probably one of the most eagerly awaited sessions because those of you who joined the session before lunch, I think overwhelmingly the main issue innovators were facing, they said, was funding. So we have a funding workshop, and I'm really pleased that we've got 4 real experts on funding to speak to you today and then to answer your questions. From our point of view, then hopefully you're beginning to get a message that while someone like Innovate does give people funding, and we give quite a lot of it, admittedly not as much as we'd like to give and not as much as you would like us to give you, then we do offer funding, but also we offer a real wraparound support service, we hope, to make sure that you are in the best place to go on the next stage of your journey, which involves seeking commercial funding quite often, and also, frankly, that you spend the money effectively, not only because in our case it's taxpayers' money, but more importantly, we want you to succeed, and it's very easy to lose focus, and quite often having a critical friend to help you, whether that's someone from Innovate Edge or someone from one of the banks, they can really help you make sure that you get the best from your money. So what we want to do this afternoon is to both hopefully demystify some of the sort of financial system for innovation, and really to give you some top tips about what's the most effective way to approach people so that you come away with a yes, we want to invest, rather than a no, go away and rethink it and come back next year, or preferably never. Please do use the chat to ask questions. Anita usually asks you to put question in front of it, so I'm clear that you're asking a question, and we'll have each of the 4 speakers, and then we'll hopefully have about half an hour for questions and discussion after that. So I'm really pleased to introduce our first speaker, Lewis Stringer, who is my counterpart, regional manager for the British Business Bank. Lewis, over to you.
That's great. Thank you very much, Julian. And whilst hopefully we're waiting for the slides to be passed over, many thanks to you, Innovate UK, and also SEMLET for the invitation to take part this afternoon. It's greatly appreciated. Thank you, Anita. So I'm going to talk a little bit about what the British Business Bank is, and I'm going to talk to you a little bit about what funding we offer. But I'm going to start off by not mentioning the word innovation possibly again. And I'll explain a little bit about why I would do that, bearing in mind the title of the panel. And I think what's important for everybody to note is that what the British Business Bank isn't it's not Innovate UK. So we sit side by side. We're both government organisations, but we are very much the economic development bank. So what does that mean? It means that actually we try to make it easier for SMEs of all shapes and sizes, ages, locations, to access the finance they need to grow. However, because of the nature of the organisation, typically most of our interventions, which I'm going to talk about, will be focused on early stage businesses. Typically those businesses that would otherwise find it difficult to access commercial funding, whether or not that be debt or equity. So most of our fund managers are going to be investing in innovative businesses, but actually they're investing in them not because of innovation, but because they have a USP that's going to benefit and grow and hopefully serve the economy well. So I think it's an important distinction to make there in terms of what the bank is and what it isn't. It's certainly not a duplication of what Innovate UK actually do. Our objective, as I said, is to increase the supply of finance to businesses where the market doesn't do necessarily that job. And the best way of explaining that is that we work with that marketplace and we work with government to identify those gaps. And once we identify those gaps, we then identify partners who we can support to fill that. And often that means giving those partners capital, underwriting, and we'll talk a little bit about what that actually means in reality, or in some instances, setting up completely new vehicles to make sure that more businesses across the UK access the finance they need. However, as important as the supply of finance, and we are a wholesaler of funds and probably one of the largest ones in the country now, actually I work on the demand side for finance. And what that actually means, as Julian alluded to earlier, is that actually it's a similar issue when you're looking at businesses to raise finance. Do they know their options? Do they know what funders are looking for? And it's getting that mix right and that balance right, and actually then getting that link between businesses looking for funding and actually the funders themselves. And again, increasing the bank is playing a role in that respect, and that's my primary role. So our programs, as I said, we use those buzzwords: startup, scale up, stay ahead, but actually in reality, we can fund small businesses, SMEs as we often call them, across a whole gamut and different range of funding streams. There's no reason why you'll know any of these names, because these are effectively program names that we have, and because we work through other funders, you'll be applying to those funders, including the likes of Barclays and NatWest, rather to those programs. But I'd like to flag up a couple of those, if I may do, those that are probably more out in the marketplace. The first of those is startup loans, and again, startup loans reflects the fact that a lot of commercial funders, and dare I say it, NatWest and Barclays, I'll let my colleagues say otherwise, often will struggle to support startup businesses. We know that you're perceived to be high risk, you may not have a track record, you may not have the security available. So about 7 or 8 years ago now, recognising that, an organisation called the Startup Loans Company was set up, and it does exactly what the name suggests. It lends to startup businesses in their first 2 years of trading, and it's been a wholly successful business a program over the last 7 or 8 years. So again, you may have come across that. And then we go the whole gamut where we look at stay ahead, and a lot of those programs there are actually very large scale programs, which is much about putting money to funders than it is into SMEs in their own right. But I'm going to touch a little bit about some of the more local funding streams that may be more appropriate for South East Midlands businesses a bit later on. And sadly, it would be remiss of me if I didn't mention probably what we've been most focused on over the last 12 months or so, and that has been government's COVID-19 support schemes. And again, you may be familiar with some of these names: CBILS, BBILS and Future Fund. And actually, as government's Economic Development Bank, it's been our responsibility to manage those programs. And actually, certainly CBILS, bounce back loans and CL bills has effectively underwritten the banking system for 12 months or so now. We are seeing some signs of lending outside of those schemes taking place, but in reality, quite substantial amounts of money have been lent to small businesses through those schemes. And those schemes, from our perspective, have actually been, we, on behalf of government, have underwritten, as in guaranteed, the lending made by those lenders. It's made sure that the business banking community remains active and is able to support businesses, particularly in the difficult times that we've all experienced over the last 12 months. And in the bottom right-hand corner is Future Fund. Future Fund was set up in May, June of last year to reflect the fact that the actual equity and angel markets had significantly retrenched at the start of the pandemic, and therefore there were quite a few businesses that were literally looking to fundraise, had got some of that fundraise in place, but other investors had pulled away because of the uncertainty of the marketplace. So we've stepped forward, and effectively with that fund, we've co-invested alongside those existing investors to make sure that more of those early stage businesses were still supported to grow, because that is still important and will become increasingly so. Hopefully you've had some time to look at those basic details of each of those schemes. What I should tell you is that those first three, CBILS, bounce back loans and CL bills, have been extended to the end of March. Future Fund has been extended to the end of this month. So actually there is no indication that will be extended further. So you have until 31st of January to look at Future Fund if you feel you meet those criteria. Give an indication of numbers. As of middle of January, CBILS had made effectively £20 billion worth of loans to almost 83,000 businesses across the country. bounce back loan scheme, which is by far the largest, £43.5 billion to almost £1.5 million business. So if you were looking at 2019, that represents a multiple of normal lending in any one financial year. And that's what's been our primary remit over the last 12 months. That's consequently led to a massive shift in the organisation. So we're doing 10 times and supporting 10 times as many businesses as we would typically do. But what I want to focus on, particularly for South East Midlands businesses, is the fact that we also recognise that there are regional disparities in the availability of finance to businesses. And one of the funds, and I know the terminology Midlands may be a confusing one, but I also work on the Midlands Engine Investment Fund, which includes the South East Midlands LEP area, and I'm very proud to do that, and I'll explain why. But the purpose of these regional funds, like Midlands Engine Investment Fund, is really to increase the number of early stage equity and debt options available to businesses, I'm going to say it, outside of London and the South East, where there is less of an issue in terms of accessing those types of funding. And I'm delighted that we are working on that fund with SEMLEP alongside 9 other local enterprise partnerships. So we've identified gaps in the market pre-COVID. Actually, you could argue there become more greater gaps as a result of COVID, because again, it's all about risk debt and risk equity. So a lot of the banks will want to support their portfolio companies under those CBIL schemes, but again, they probably wouldn't necessarily be looking at supporting businesses even pre-COVID in those areas. So again, you'll notice 2 debt funds and 2 equity funds. And just to show you that actually we are lending and investing in the SEMLEP area, those are some of the numbers in terms of investments and companies we supported. And although in the great scheme of things, they may not seem significant, they actually are. So in terms of the 2 equity funds, to reflect how limited the equity market is in the wider Midlands area, in our first full year, we were basically doing 20% of all equity deals, big and small, in the region, which again gives you an indication of the importance of funds such as the Midlands Engine. Some stats there. I did include the information. I thought probably that it would be one to get rid of because again the world has changed in 2020, but I think it brings forward some important messages which still will remain the case, particularly hopefully this year, if not in 2022. Actually, finance can be an important measure, an important factor in growing your business, but pre-COVID there were mindsets and sensitivities about taking finance, whether it be debt because you're worried about borrowing money, offering personal guarantees, offering security on your house, fully understandable, or equity in terms of actually losing control of your business. And I think that mindset actually hasn't changed. The businesses now, however, because they've not had options, have had to take finance over the last 12 months. So hopefully when we kick back into normality into this year and next year, that actually we can start working on that mindset, and perhaps we'll touch on that in terms of our Q&A later. But as I said to you earlier, the bank is increasingly looking at the demand side. The investment readiness side is a phrase we often use. And we've got 2 particular tools that I would just like to show you so you're aware of them. The first is the Finance Hub. Lots and lots of information now on a regional basis about what you need to do and the various finance options available to you. And finally, from me, the Business Finance Guide. And apologies to one of my panelists who I noticed had it on one of their slides. I'm going to use it because it's ours. But we do this in conjunction with the ICAW Corporate Finance Faculty. And I would definitely recommend, if you are uncertain about your finance options, it's the first time you'll look to raise finance, have a look at that. It's independent. It doesn't force you down a particular funder route. And as you'll see from the diagram, most, if not all, of the major players in the finance markets have signed up to it, say it's a good thing, have a look at it and use it. And I think that's it from me. So I'm sure the slides are going to come out to you in due course. Those are my contact details. If you're a business in the South East Midlands looking to raise finance, please let me know. Thank you.
I've forgotten. Sharon's not going to be using slides, aren't you? You're going to be just doing a talk without slides. Well done, you. So really pleased that Sharon, I know Sharon as the NatWest Accelerator for Milton Keynes, but I think your remit stretches far wider than Milton Keynes, doesn't it? But really pleased that you can join us today.
Thank you, Julian. It's lovely to be here, and it's great to see some familiar faces as well on the call today. As we were preparing for this session, I really wanted to focus on what's the top tips, what's the bits of advice and best practice that I can share with you that I feel would be most valuable. And I think, you know, the things I'm going to cover are not going to come out and be completely alien, but I think it's things that are really worthwhile keeping a focus on. So just as an introduction, first of all, for those of you that don't know me, my name is Sharon Rye. I'm the Entrepreneur Development Manager at NatWest. I have run the Accelerator in Milton Keynes for the past couple of years, have been a coach, so worked with hundreds of businesses, supporting them to grow and develop their business, and also working with amazing partners like the British Business Bank and Innovate UK and SEMLEP to really collaborate and identify how we can support even more businesses in our territory. I think it's safe to say that the last 12 months have been one hell of a learning curve, and people have talked about change. One of the things that we have found ourselves saying over and over again was, when was change not happening? And pre-COVID, there was a statement that became quite popular where, and I don't know who said it, but I'm sure the minute I say it, you will have heard it in some forum, that we are experiencing the fastest rate of change ever, yet it is the slowest it ever will be. And so as we adapt to change, innovation plays a really key part of that. So I want to kick off with my very first top tip, and that is to be focused on solving problems, not innovation. Might go against the grain when we get very excited by this buzzword of innovation, creating something new, creating something quite unique and high value. But actually, true innovation happens when we're able to solve problems. So whatever business idea you're working on, really focus on the problem that you are looking to solve. And last night I was actually listening to an interview of Elon Musk. I think it must have been about 3 years old, so it's nothing new. But he was talking about the tunnels that they're building in the US and looking at, you know, these underground tunnels for travel. And one of the things he said was, we realized that as our vision and our innovation for Tesla became a reality, we had created another problem in that there would be more cars on the road, not less. And so they looked at another solution. So how do we reduce that congestion? And the very best entrepreneurs will always focus on the problem and then look to find the right solution and the most innovative solution for that problem. So that would be my number one top tip. Really be clear on what the problem is that you are solving and focus on that. Second top tip is to take extreme ownership. In a world where we have got used to convenience and we have got used to things coming easy and things being available at our fingertip, entrepreneurship is about taking extreme ownership and really digging into the detail, really focusing on all the elements of your business and being really clear on your market and your industry. I literally less than an hour ago got off a call with an entrepreneur who's come up with a fantastic solution for the education sector. However, he had done no homework on that particular sector. He spent half an hour presenting his solution. And if I was looking at that through the eyes of a funder, I would say, yeah, great, I can see what you've built is fantastic, but you have not convinced me that you understand your market and you will be able to sell to your market. So taking extreme ownership of understanding the industry that you are selling into, the industry that you are a part of, recognizing all the moving parts of that industry is so important. And particularly when you are presenting your pitch, whether that is to an angel investor, whether that is for a grant, being able to really demonstrate that you fully understand that industry that you're going into is really going to work in your favor. So that's the second area that I would talk about. Third area is collaboration. We are in an age of collaboration and not competition. And when you're approaching funding, that becomes even more important. Sometimes when entrepreneurs are at the very early stage and perhaps it's just themselves and a co-founder, they struggle to build credibility in their team. So it's really important to start to look at who are the experts, who are the advisors, who are the people that you are engaging with to help build out your business and build out your idea. And particularly when you're going for grant funding, quite often I have seen that when there's collaboration between multiple organizations, they tend to get more traction, because what we're doing there is almost de-risking that opportunity, because there's more than one party involved, there's credibility around the team, and you have a bit of a track record that can really help investors feel a little bit more safer with the investment that they're making. So, and I really believe that that's across the board, whether you are going for grant funding or private equity, or, you know, it's your first angel pitch, having that team and showing credibility and showing why you are the right team to be driving this idea forward is so important, because 9 out of 10 people are investing in you and not so much the idea. Want to move on to when to go for investment. If you start to look for investment when you need it, you are too late. And the reality is, when you're building out your business strategy, really focusing on where you are going to need investment and when you are going to need it, and having that mapped out beforehand, will allow you to start to explore the avenues of investment and approach them at the right time. Because what happens is, if you're going after money at the time you need it, inevitably it takes twice as long and is 10 times as hard. And what happens then is we start to see some of the stress on entrepreneurs who are desperate to get funds in, and it will mean that it will really influence your decision. Whereas if you take a proactive approach and make it as part of your investment strategy and part of your business strategy, and really take a proactive approach on funding, you've got a better chance of understanding what funds are available to you when, and you can prepare for them and pitch for them at the right time and be really in control of that whole process. I promise you, it's the hardest thing to do, is to raise money. So you may as well get ahead of the game on it. With investors, it's important to be fully aware of and to fully research where you are getting that money from. Regardless of whether you come to a bank or you go to a local authority or it's a grant, there are strings attached. So being fully aware of what those commitments are, what those strings are, both from a positive and a negative perspective. So funding can build credibility and build traction in your business. Securing grants really helps to raise the profile of what you're doing, because what it shows is some commitment and some belief in your project. But fully understanding what comes with that money is so critical, not just for how you run your business and the direction that you take, but for future development of your business. So for some organizations, crowdfunding may be absolutely the right way to go, but for others, that is not the right way. And it's really important to understand, what channel are you going to use? What vehicle of funding are you going to use? What's the impact of that today? And what's the impact of the future? So taking a really well-researched approach to funding is so important. And again, if you're doing that beforehand and you're giving yourself the time to prepare for it, you are more likely to make a really informed decision there. Last thing that I'm going to talk about is pitching. Regardless of where you're going, having a clear pitch is so important. Engaging your audience, ensuring that you're being really clear in terms of what you're delivering, staying away from the tech speak. Sometimes, especially when I see really innovative or techie businesses or ideas, they get really caught up in the technical language of what they're doing. And sometimes what that can do is alienate the audience. So get really good at pitching your idea, being really passionate about it, do lots of trial runs in front of the mirror and in front of your trusted advisors, and ensure that you've honed your pitch to help you stand out, because there's a really high chance you're going to be in a competitive environment. So if you get that pitch right, you'll get the buy-in and hopefully go on to secure that investment. So I'm going to park it there. I think you've listened to my voice for long enough. Really keen to answer any questions that you may have. And Julian, thank you for this opportunity for presenting as well.
And just to show that I'm commercially entirely neutral, and funnily enough, neither of you are my bank, but I'm really pleased that we have Ahmed from Barclays, who's going to talk about your experience. It sounds like principally working with high growth companies in the Cambridge area, but I'm sure you've got some in your portfolio in our part of the world, about your experience of working with them. Thank you very much, Ahmed.
Absolutely. Thank you for having me. So yeah, I'm Ahmed. I'm a VP in the high growth and entrepreneurs team with Barclays. Effectively, what the team was set up to do, probably 5+ years ago, was to really work with a segment of the market that we thought needed a different approach for support and banking. Historically, the banks always looked after SMEs, and we recognized that what we deem a high growth business probably had some very different requirements, specifically around funding, growth trajectory, and the collaboration piece. So we built out this proposition to really segment that market, work closely with founders who are in startup phase, and the plan really is to help them scale up and hopefully exit and IPO. So the way we do that is threefold, really. So we've got a dedicated relationship team right the way from startup to scaling, corporate, and down the line the investment bank. And what that team offers really is, apart from the day-to-day servicing of banking and requirements, it's really that mentoring piece. It's collaboration. So we've got a dedicated venture capital unit that aims to connect our businesses with our Rolodex of investors that we know. And that's a really important piece, because often businesses will connect with investors but not necessarily be at the right stage, or not connect with the right type of investor. And that piece is critical, because partnering with the right investor is crucial. It's a partnership, right? They're going to be a part of your team and a part of your growth. So getting into bed, so to speak, with the right one is very, very important. And then we've got our growth solutions, which I'll touch on in a bit more detail on a later slide. And that's everything from your cash flow, overdrafts, invoice discounting, to international requirements when you're growing, whether it be FX or trade. And then the last piece, which I think is the most important piece, is really the beyond banking element that we recognize these businesses are going to require. So that's effectively opening Barclays' network to our customers. And we've done that in a number of ways. So we've developed a entrepreneurs awards program that's been running for 5 years now, where we hand out awards, startup, scale up, international expansion, entrepreneur of the year, really to help with the PR push for those businesses and all involved. We've got accelerators that run, so an annual fintech accelerator that's run by Techstars, tens of incubators up and down the country. Hopefully when we're out of this lockdown, you'll get to pop into your local Eagle Lab and really see what that ecosystem looks like. We've also got some strategic partnerships with Female Founders Forum, and university partnerships with, one that I can think off the top of my head is Cambridge Judge Business School, where we run an annual scale-up program. Really important program, I think, because it allows founders and management team to take, one day out of the week for maybe a month or so to really reflect on their business, rather than being head down driving the business. And that reflection gives the opportunity to look at everything from culture, strategy, what growth looks like. So yeah, really, really good program to be involved in. So this slide really touches on the funding framework, and you see all the different stages: seed, growth late, and expansion, and the particular touch points that you can get involved in to raise funding along that line. Barclays' touch point is really highlighted in the blue there. So we've got, and what I'm going to delve into in a bit more detail here is really that earlier stage seed and growth funding opportunities. So with the accelerator, we're not actually funding ourselves directly as a bank. As my colleagues touched on, funding early stage pre-revenue businesses is a really, or even revenue generating businesses as a bank, is a really tricky thing to do. We are, I would say, in comparison to VCs, risk averse. We aren't VCs. VCs, take equity for that risk, and we're predominantly lenders. So it's a very different model. But what we do with the accelerator is we prepare businesses for that funding drive. So we get them in place, support them with our network, and then bring in investors on a demo day to really get that push that they need for early stage capital. Eagle Labs is a slightly different proposition. It's more of a community, an incubator, and there is early stage funding, typically in the form of overdrafts between kind of 1 to 25K for those businesses. And then when we look at the growth and early stage market, you've obviously got VC, which is the main driver and push for growth businesses in the UK. And where we sit alongside is really that space there. And there's a proposition that I'll delve into in a bit more detail in the next slide, which is quite innovative and really supports businesses in that growth stage. So touching on those elements there, so the area of this slide that I really want to focus on is venture debt. Because as a bank, historically, we've obviously lent money, and the way we've done that through traditional businesses is through establishing and working with established businesses, predominantly looking at their track record over a couple of years, making sure that they're profitable and lending responsibly in accordance to that profitability, so they're able to repay that debt and grow well. Growth businesses and innovative businesses are, from my experience, very rarely profitable in earlier stages. So as a bank, we had to sit back and think, well, how can we adapt our proposition to really provide some sort of solution to these businesses? And I think venture debt has been really useful in bridging that gap. And how it works is it's a non-dilutive debt option, so it's not equity, that goes in alongside a capital raise, typically at Series A. And the idea is that a business can go out, raise capital from investors, and then speak to the bank, provide a compelling proposition, and the bank will introduce debt to complement that equity, which really can be useful in extending a business's runway, improving their valuation, and ultimately, not diluting, because when you raise equity, obviously you're giving away equity. So that is quite a compelling proposition for those types of businesses. The other areas that I want to bring to your attention here is kind of our partnerships with the likes of Market Finance and Propel. So as a bank, obviously, we're a 300-year-old institution. Sometimes moving quickly isn't at the forefront of our skill set, so to speak. So we've partnered with tech-enabled businesses that we think can do certain things better than us. One of them being Propel's asset finance range. So if that's something businesses are interested in, we've got a great partnership with them. They're able to get decisions turned around really quickly, something that we maybe historically have been guilty of not doing. And Market Finance with their platform for invoice discounting solutions. And this last slide really just, again, touches on those partnerships and the beyond banking piece. So the Eagle Labs network, so I think it's over 25 labs now, incubators that tie in mentors and support with funding opportunities, Techstars, who run our 3 accelerators, London, NYC and Tel Aviv, Rise, a co-working space, the partnership with Judge Business School, and various other partnerships below. So yeah, look forward to answering any questions in the Q&A around how to prepare for both debt and equity. In my time working for the bank, I've sat on various investment committees with external partners, angel investors, so really had a good insight as to what they're looking for. And I can certainly share my top tips for what to do and what not to do when applying for a bank loan or a venture debt opportunity. That's all from me. Thank you.
Brilliant. Thanks, Ahmed. Really interesting talk. And do put your questions in the chat. If not, I've got a couple of questions around, both to Sharon and Ahmed about how do I get onto these programs? What should I be looking for? But anyway, I'm using up Himaxi's time. So I'm really pleased that we've got Himaxi from the Innovation Loans team within Innovate. She's going to talk about the innovation loans we offer. So although most of our money is in grants, we have branched out really successfully into looking at other financial instruments that we can use to support innovative businesses, and loans are one of them. Thank you very much.
Thanks, Julian. It's so rare that I get called by my full name, Himaxi. It's so rare. Most people tend to call me Maxi, or other things, which I won't actually tell you what they do. Right, I'm hoping that I'll be able to change some of these slides, but just to start off with, it's a real pleasure to be here this afternoon, and thank you all for joining us. I can see some real familiar faces here, some real blasts from the past. So hello to you all. I'm going to try and switch my camera off because very often with these presentations, I end up sounding like a Dalek, but I don't think I can do anything at this moment in time. So let's see how things go. Hopefully it will work. Sorry, Anita, I was just struggling to move the slides, which everybody else seemed to be okay with. Okay, well, just start up. Lewis mentioned that he wasn't going to use the word innovation in his presentation. My presentation is littered with that word, so let's just get going. And also, I'm going to apologise in advance for death by PowerPoint, but I just had so many interesting facts that I wanted to share with you. I didn't want to sort of cut any of those down. So hopefully you'll find them interesting as well. Innovation, really, really important. Actually, before I do that, let me just introduce myself to those of you that don't know me. I'm Himaxi Bat. I'm the programme lead for Innovation Loans at Innovate UK. We focus very much on the continuity loans, and it's a real shame that at the moment those competitions have just closed. But really, it's the grants that Innovate UK seem to be known for. But just to let you know that, yeah, we do innovation loans as well. And hopefully we'll be getting some more later on this year. Okay, so innovation really, really key to the UK's future growth and economy. We're looking for that innovation that drives productivity, exports. We're looking for economic growth by accelerating the development of those products, processes and services. We want to create those new value chains and transform those existing sectors and stimulate the new industries. So who are we? Who is Innovate UK? I love this. This is a bit of a boast, but we're the UK's innovation agency. We want to invest in businesses, invest in their new ideas and technologies, connect those businesses to the right people. We want to drive economic growth, and we want to increase those social benefits. So just to touch on what we're doing in the East Midlands, Innovate UK has extended 1,626 grants to a value of just over 205 million. And we've been involved with 51 knowledge transfer partnerships, as well as 941 collaborative R&D projects. With regard to the innovation continuity loans, we've got, just on the innovation continuity loan side, just over 400 applications. At this moment in time, we're still going through them, so I can't tell you how many relate to the SEMLEP area. But it's really, really good starting point for us there with the continuity loans. Okay, I just really wanted to mention this valley of death, because when businesses are innovating, when they're carrying out that research and development, cash is going out of the business before it comes in, and they've got to invest some form of money in the business. Something that smoothing out that valley of death is something that grant funding can do. Filling that valley of death, though, can be done by external finance, particularly capital. Equity investment in business is really, really valuable. And The way we sort of source that funding, businesses source that funding, is by way of a funding escalator. Maybe many of you have already heard about that. This is what it sort of looks like. So in those early days pre-revenue, people start with money from friends and family. They then get money from angels, moving on to venture capitalists. And then once they're trading, the more commercial sort of debt finance and private equity. This particular chart, it's quite an old one from Nesta, and you may have seen others that look very, very similar. I'm not quite sure I agree with this because it has grants. It assumes that grants are that first bit of capital, it's that free money, and actually grants are really there for stimulating innovation rather than being early stage initial capital. So is it really a myth of this financial escalator, or what's the reality like? If we look at that first picture, we've got, it's Canary Wharf Tube Station, for those that don't recognise it. We've got this bright, shiny, lovely linear escalator. You start at the bottom, takes you to the top, nice and easily. The other picture relates to Westminster, and it's probably more what getting access to finance is like. You've got the stairs, you've got escalators that you have to go up, you have to go down. You've got to divert to change tube lines. You know, you need to have a sort of a strategy on how you're going to get from the Jubilee line to, say, the District line. So what I want to do is try and put forward and help explain where sort of that money comes from, where the different forms of finance fit in, and how to navigate to where people want to get to. So looking at what's the support out there for research and development and innovation. So where do we start really with supporting R&D? First is probably through the tax system. This is R&D tax relief. It's there for any business that has qualifying R&D expenditure. I think 50 to 60,000 businesses in the UK make use of this support and claim billions of pounds each year. An SME doing R&D can claim about a third of those costs as R&D tax credits after the event. And this is available through the government. I appreciate that my slides have got quite a lot of information, but we should be sharing these. So please, you know, when you get those, hopefully you'll be able to see all the details. At the moment, I'd probably just end up whizzing through them. Okay. So what does Innovate UK do? Talked about the grants, and that's really where we're really well known for. We do more of that specialist support. We provide grant funding for selected businesses, and in a way, I think we're quite niche. We'll define the specific eligibility criteria for the grant programs that we run. We'll think about the size of the applicants. We look at collaboration because we believe that's really important for transforming the industries of the future, or to bring in the research base as well as the large and the small businesses. We look at very specific things around the scope of the activities that we're supporting, and which might be very much challenge-led through something like the Industrial Strategy Challenge Fund. It might be sector-focused, and occasionally we'll do more broad-based responsive programs where we're looking for the most innovative project proposals, and we are highly selective in doing that. So this idea that grants are the first starting point for raising capital is incorrect. And businesses that think they're entitled to a grant instead of raising that first round of capital is horribly incorrect. Just looking at the grants, to view what grants are available through Innovate UK, please go through to our website where all the competitions are registered. I think at the moment we've got about 9 open competitions ranging from SBRI to the Smart Grants and some of the others. What I also wanted to tell you about was one of our programs at Innovate UK is the Investor Partnerships Program. Here we're trying to bring together the grant funding for highly innovative R&D projects, and using our ability to assess projects, provide funding and stimulate activity, we can put together with the investor partners who can look at the business capability, the growth opportunity and provide capital. What that means is that alignment of capital alongside our grant funding, we hope will help those businesses that are investment ready recognise that they need capital and are doing innovative things. They've got a much better opportunity to deliver the impact that is at the heart of everything that we do. So one of the projects that we had running, and that was really as a result of the impact of the COVID pandemic, was the innovation continuity loans. These were there for later stage R&D businesses, and we were able to extend the scope of these over the last sort of 6-7 months. Innovate UK, we've had much more of an appetite to take on the innovation risk than the traditional commercial lenders, so like Barclays, NatWest. Unfortunately, as I said, these competitions have now closed, but we hope that we'll be able to bring something new, maybe later on this year. But at this moment in time, we don't have too much detail about it, but watch this space. Okay, I just wanted to quickly just touch on some of the debt finance and just some of the stats around it. And I suppose I'll probably just thank Lewis here and the British Business Bank for providing some of these figures as I go through them. So talking of lenders debt finance, let's look at it in the context of the UK. Most businesses don't borrow money, and many that could still don't borrow because they're discouraged. It's quite scary to see a stat in the British Business Bank State of the Small Business Market report that 73% of businesses would rather not grow rather than borrowing. I think there's a real risk aversion from the business landscape, but also there's an aversion to risk from the banking sector. So what's the government support for access to finance? And I think the government supports this quite a lot, and it's particularly through the British Business Bank, through Lewis and his colleagues. And they're offering startup loans, as he said, directly to individuals to start their new business. They've put a lot of capital into some of the challenger banks, the peer-to-peer lenders, and they've also provided the banks with guarantees where collateral from the borrower hasn't been good enough. And it really just helps a little more than they would understand. Lewis has also already mentioned the CBILS and the Enterprise Finance Guarantee Scheme. One of the other things that could be worth considering is the UK export finance. This is really, really important as it's quite risky to, as it is a risky area. So export credit insurance is key. Other funds or schemes in the devolved nations include the Development Bank of Wales, the Scottish National Investment Bank, and there's also regional activities that are around. And obviously one of those is the Midlands Engine Investment Fund. So these are specific debt facilities, and what they're trying to do is make sure there's enough capital to provide access to finance for some of those smaller businesses to scale. I wanted to just touch on equity finance. And yeah, the equity finance, really, that's the real risk capital before the finances are available. So where does that come from? It's for a few very select high growth potential firms because an investor wants a strong return on their investment. And up until the start of the COVID pandemic, the UK's equity markets were booming, particularly for those early stage equity investments. And you see here again, a chart from the British Business Bank with the number of deals up to the end of 2019. You know, there were record numbers of deals, record levels of equity, and particularly in those tech sectors and life sciences. Software as a service, fintech, they don't need too much in the way of capital for equipment, but they are growth rich and they are very, very attractive to investors. So, and if you just think back to that finance escalator, that ladder, and that angels and equity crowdfunding platforms are earlier stage, and they will typically invest somewhere in the region of 100,000 to $1 million as a group rather than as individuals, then the VC firms are looking to invest somewhere between $1 million to 10 million. The next stage is really those corporate venture capitals. So this allows the bigger businesses that want to invest for strategic reasons. And then we've got the public markets. People often think that you can't launch into the stock market until you're huge. But the alternative investment market has a high growth segment, and you can raise funds from £3 million upwards. I know Sharon touched on this, what are investors looking for? Well, they're taking a share in the business in exchange for their risk capital. So though the business isn't giving away equity, they are exchanging shares for cash, and the right valuation makes sense. Investors themselves are looking for tax benefits, so things like the Seed Enterprise Investment Scheme, the Enterprise Investment Scheme, EIS and venture capital trusts, they have tax benefits for investors that encourage more investment. I also mentioned the strategic alignment for corporate venture capitalists, and they want an investment in the business as well as to influence through the board seat. But typically that will be as a minor investor. Investors want a higher return when that business sells, so that they'll be looking at the expectation of return, the timing of that, what the exit strategy is going to be, where's the business in its growth stage, what's the quality of the management team, and is this a valuable proposition? Is there a value proposition there? And also looking at scalability. How defensible is their position in the high growth market? So what's the government support that's available for the equity finance? Once again, there's quite a bit of support available. There's a lot of co-investment where private investment is matched with the public sector investment to make investment go further. The British Business Bank has already said, as Liz has mentioned, it's got some big programs. The Enterprise Capital Fund, it's a large program looking at putting investment alongside the private sector into venture capital firms. There's the British Patient Capital. They've also started to look at specific market areas with the National Security Strategic Investment Fund. And government have been doing specific work, obviously in relation to the COVID pandemic, where the Future Fund, CBILS, and those other funding options were available. And once again, I think tax reliefs are really, really important here. I just wanted to mention the Business Growth Fund. Though this isn't a government support scheme, it does have support from the 4 major banks, 5 major banks, looking mainly at growth capital, later stage activity, and that was really put together after the global financial crisis of 2008, and that's sort of still going. So where are we at the moment with regard to raising equity? This data reported by the BBB shows that equity markets were growing all the way up to 2019, and then COVID happened. And some of these slides from PitchBook show that since the pandemic hit globally, the venture capital markets have really, really been hit as well, and specifically the UK equity markets as well. So this next slide really is looking at some data that that Bo has produced, showing the amounts and the number of deals and how that's really, really reduced in the last year, really, which I think a lot of us expect to have done. But which are the key areas that have been hit? And it's those who are coming round for the first time, who are trying to raise money at the very outset. Investors appear to be protecting their portfolios, and where they've been investing is really back into those companies that they already have an investment in. They're following those, they're supporting them, as these are the organisations that are having trouble. As we all know, it's a really challenging environment at the moment. The Future Fund has helped here a little bit, as it was set up with that requirement for previous investment. So though it's helped many cases to keep money flowing into those existing portfolio companies, but unfortunately it hasn't helped those first-time fundraisers. So, you know, when businesses are looking for that equity investment in particular, they need to be ready. And they'll probably typically say, I need money. But so often what they need is a lot more than they've quoted. And as Sharon had said, you know, recommend that you get investment ready. There is a lot of support out there, and a lot of specialist advice, you know, the coaching there we can support through Innovate UK Edge. There's the UK Business Angels, the British Venture Capital Association, UK crowdfunding. And I think really, really key, businesses need to get better at articulating who they are, what they're doing, what the opportunities, and why they're a good match for the investor that they're looking for. Showing how they've been supported by Innovate, so whether that's by way of grants or by way of the Innovation Continuity Loan, really gives those private sector innovative funders some confidence that, you know, that somebody else does believe in that business. I'll whiz through these, some really good resources online, and Lewis has already spoken about these. So really, Innovate, what we want to do is we want to support highly innovative businesses, the really risky innovative businesses, those that need risk capital as well, and particularly equity investment. We want to see businesses that have a really strong technology development strategy, they've got a strong commercialization strategy, all underpinned by a funding strategy. Without that, they're just not going to make money, and there won't be that impact on the economy that we at Innovate are looking for. To be honest, I think this is probably how it feels for innovative business. You know, it's just that constant circle as well. And just to really finish off, I did include some links to some of those sites, to our innovation funding service, and as I said, I think the slides are all going to be shared. So thank you all for being here today, and thank you to Semlap and KTN for letting me present today. Thanks very much, and now we'll head back to questions.
Brilliant, thanks Maxi. Really good run through of both what we offer and some of the context for that, which I know has generated some questions. So we're now in the Q&A. Some of my colleagues have been far too diligent and answered all your questions online. So they might have to indulge me and let me ask them again so you can answer in person, but keep the questions coming in. There are a couple, I'll let sort of Maxi just sort of draw breath, but there was one asking about the portfolio approach that Innovate adopts, and sort of querying how does that work? Does it mean that you know, better qualified applications get bumped, if you like, by lower qualified ones in that portfolio approach? Well, I mean, the short answer is that Innovate's always adopted a portfolio approach, so it's not particularly new. It's always been in the small print. But what we do is we basically have a sort of pass mark, if you like, and then it goes to a more senior board who get told, you know, there are 50 grant applications that have got through the pass mark, and then they can make a judgment on basically a combination. Usually it's, you know, how you maximize the funding that's available, because we're always heavily oversubscribed. So they might be doing well, rather than 5 for 10 million, we'll give 4 for 10 million and 2 for 5 million to make the money go further. Or else there will be some considerations, for example, around the particular technology sector or the particular areas of interest that companies are proposing. But the key thing is there aren't, we're not taking a really high risk approach to it, because all the companies have been assessed by our expert assessors as fundable. What the next stage of the portfolio management does is try and make sure that taxpayers' money goes as far as it possibly can within the bounds of the competition. So be reassured that the portfolio management is not involving the sort of random displacing of really high qualified candidates for ones that are less qualified. We just wish we had more money so we could fund all the great bids and propositions that we get through. And also, to be honest, in something like the SMART grants, where we got last time, we got about 800 grant awards, then statistically, what you've got is, you can imagine, is enormous clustering. So, someone can be at 50 or someone can be at 350, and you're talking about 0.2 percentage points difference between them, which is really quite marginal when you're at the 85% or more. So, that's why we adopt that pragmatic approach to portfolio management in all of our competitions. And certainly it's not something that is a new innovation over the last couple of years. I hope that answered the question.
Oh,
sorry,
I
Maxie.
just wanted to add, with regard to the innovation loans, we probably look at them a little bit differently to the actual grants. I think one of the advantages is we're not inundated, we won't get thousands, hundreds and hundreds of applications. Well, I take that back a little bit with the last few competitions. But we had a pot of money, and we will actually judge each application. There'll be the project side, which will be looked at by the external assessors or the innovation lead, or the project may well already have been have gone through that sort of approval process. And then it's our credit team, and they will go through and do the credit risk, the credit analysis, make sure that the business is right for a loan, taking into account that we are going to be a lot more risk, not as risk averse as many of the banks will be. And then that decision was put together with the project, and that goes to credit committee. So each application is looked on its own merits around the project innovation, and also around the ability of that business to repay the interest and the loan, the capital, when that falls due. So hopefully that sort of makes a little bit of sense.
Brilliant, thank you.
Brilliant. Can I just step in, because Jazz has asked a question I think could quite affect...
Yeah, I was going to say it might be worth taking the conversation you're having with Jazz and bring it into the forum rather than on the chat, because I think it's really important stuff.
So, Himaxi, it's actually a question for you. Jazz has put it back in the chat again regarding security, guarantee and debentures. It's a key point, particularly how any default is addressed by the business environment in very uncertain times at present. So could you just provide a little bit more around the terms of the loans and things like that, just so that the audience understands that?
I think the terms of the loan are excellent. I think I'd seen a couple of questions around the interest rate at 7.4% being quite high. There's the security side, and then there's the sort of the term. The way the innovation loans were set up was really, really very much about trying to support those later stage R&D businesses. So what we had was a maximum term of 7 years, and it could be split into a certain number of periods. So the first period is the availability period, and that is over a year. And this is where the business is doing its R&D activity. It really needs that funding. It's not generating sales. So over that period, the business can draw down the loan quarterly in advance, and the interest rate that they would be paying is at 3.7%, not the full 7.4%. The remaining 3.7% is deferred to the actual repayment period. So we've set it up in 3 different stages. The second period is the extension period for the loan. Now, what we're expecting is that by this point, by the extension period, the company will have completed all its R&D activity, and it will be looking at how it can commercialize the sales, looking at its business model, And at that point, no further loan drawdowns are allowed, but they only once again cover interest at 3.7% over that period. Now that can be up to 2 years after the availability period. And then the final period is the repayment, and that's really where full repayment starts on the full amount of the loan, as well as the deferred interest from the other 2 periods. The maximum term of the loan can only be 7 years, so they could have 1 year for the availability period, 2 years for the extension, and a max 4 years for the repayment period. But it can be any kind of structure that they want to do that. So where we're talking about the 7.4% interest rate being a bit high, I think actually the way it's broken down, it's very, very good in terms of those businesses that need that support. With regard to security, we don't take personal guarantees. All Innovate UK loans do is take a mortgage debenture over the assets of the company, and that is it security-wise. We'll be happy to subordinate that debt because we understand that they may well want to go for commercial finance at some point, and we're happy to come down in our priority. We're happy to give the lender a priority on that. There are some covenants that we do ask the companies to meet, so just some promises to be at certain levels, and that's all agreed within the loan agreement. So does that cover off the questions that were asked?
Yeah, I think so. From my point of view, very clear. Jazz has just asked. It might be worth Maxie, you having a conversation separately with Jazz.
Yes.
I mean, there was another question that I think Anthony asked, really around this issue of, are these various financing options open to startups? Do you have to be profitable? How do you actually get on the first rung, if you like? Particularly as I think you were right, Maxie, in saying that although we do fund startups, then we don't, because if nothing else, of the length of time it takes to apply and be awarded a Innovate UK grant, then you could be waiting 6 to 9 months to get the money. So we're not necessarily that initial first source of funding. So I don't know whether colleagues have any sort of comments that you'd want to make about what you have to do to persuade you to hand over the money if you don't have a profitable business with lots of assets to offer up as evidence.
Can I just share from my perspective that what I'm seeing is that those early stages of the business, and perhaps the first year at least, it's not sensible to go looking for loans and investments, because in that first year you would not have been able to conduct enough research, testing, trials to see that you even have a business. So in fact, that first year really should be friends, family, don't have turkey at Christmas, savings, that type of thing. And actually that also doesn't mean remortgaging your entire life in that first year. So I think what you have to look at, and the responsibility that an entrepreneur takes, is if you've decided to go down this journey of building a business and you're at the very early stages, put your priority on testing your idea, testing the market, getting as much evidence to show that you have a viable business. And in fact, once you've made a few sales or got some agreements, that's the time when you should start to look for external money, because people are not going to be prepared to put money into something that hasn't been trialed and tested. And equally, why should they? So it's a bit of a challenge back actually to entrepreneurs that don't go looking for money until you have validated your idea. I know with innovation, sometimes there's an element of investment needed for R&D, but you can apply for R&D tax credits at some point as well. So there's always different ways of going about and doing it. But the first thing has got to be to validate what you're doing before you go down any route of whether it's banks or loans or grants. Get that validation bit done first, because after that point, everything does become a lot easier.
I'd have to agree with that, Julian, if you don't mind me coming in.
Of course.
So we do this thing about business plans, don't we? I think one of the key things for a business plan, and again, apologies for saying this, is that there's too many business plans that are 30 pages of the technology and the innovation, dare I say it, and actually not too much commerciality attached to it. And that's all about that problem solution, working out your USP, working towards actually validating it from a funder's perspective, whether that be debt or equity, because no responsible finance provider is going to provide you with debt if there's no real certainty they can get it repaid. They're just putting themselves into difficulty, let alone the business, right from the outset. So one of the ways around that is that when you are producing your business plan, why don't you incorporate a funding plan alongside it or in it, so that you can get a clear sense of where you are at certain points, and actually, first and foremost, is finance needed? And if so, what type of finance is needed? So again, one thing that's often missed from a business plan, if it's produced, is not so much the financial forecasts, which are very important, but actually an understanding of where you are at each stage. It's almost that life cycle model, and therefore, if funding is required, and if so, what is the most appropriate type of finance for the stage that you're in? But I'd agree with Sharon, at the end of the day, and we're all funders on this call, don't go chasing the money. Don't go chasing the money. Certainly on a commercial basis, grants maybe, but on a commercial basis, actually have a clear rationale from your own perspective, why you want the money, you can repay it, okay? And if it's the right thing for you at that stage to take external funding. One of the big issues from an equity point of view is taking that money on really bad terms as well. Because again, the number of times I've seen that and it's really stopped proper fundraising happening. And again, apologies, crowdfunding is great, it has its place, but sometimes it's a real difficulty of any institutional investor then getting involved once crowdfunding has happened. But that's just an example.
Great, thanks, Lewis. Ahmed, do you have anything you'd want to?
Yeah, I was just going
to
echo some of the sentiment. I completely agree. You know, from a loans perspective, it kind of it describes itself, right? It needs to be repaid at some point, and you know, any responsible lender is going to want to see that track record before, you know, advancing the funds. And then you have the equity option, and really, you know, going for equity at the right time is crucial, because raising capital from it, you may find, you know, a pre-seed angel investor that's willing to invest in you, but they may take, you know, at that stage 50% of the business because they're taking 50% of the risk, and then that really, you know, dilutes a founder and gives them, you know, issues down the line, right, where they need to scale up. So I would just say, you know, to really work on that feasibility of the business, to go it alone, bootstrap for as long as possible, and then to consider your options thereafter, and to prepare accordingly for those options, because it's all money and capital, but you know, capital from different providers is very different in terms of what they're looking for. So I would urge you know, founders and business owners to speak to their accountants, because often, you know, they're specialists in their field and they're not specialists in finance. And really, your accountant or your advisors should be able to guide you and tell you, well, look, there is no point approaching a high street bank for a business loan at this stage of your business. And these are your options, and this is why. So I think, you know, approaching the right partner at the right time for the right reasons is quite key, and it will save business owners a lot of trouble, I think, in actually, you know, the headaches or maybe the perceived rejections, when actually they're maybe just approaching the wrong people. So yeah, and I'm happy to touch on kind of what that looks like in more detail from us.
Great, thanks. While you're on, another sort of reflection from you maybe. Within Innovate, certainly when we've run the open competitions over the last year, we've had a real strong influx of people wanting to do digital health, you know, digital retail, chatbots, you name it.
Yeah.
I mean, I suspect that's a combination of, it's a relatively easy industry to get into because you don't have to spend lots of money on kit. And obviously we're all obsessed and have become expert users of digital technologies. What's your reflection, Ahmed, about, you know, what's hot in your world? Is it pivoting towards digital, or the stereotype would be, if you come from Cambridge, you've got a drug that you've invented and you want funding for that? What's sort of hot in your world?
In Cambridge, the university is still kind of critical to everything that's going on. So you're seeing a lot of PhD work spin out into innovation in life sciences and so on. Digital is a fantastic space, right? So I always encourage people to go with the trends, maybe not go against the trends. That makes your life easier. But I'm going to touch on something that Sharon mentioned earlier on, is build with your customer in mind. There is no point in building the best digital app that no one wants to use, right? So go out and speak to your customers, validate with them, understand the market. And so often I see that index where, there's that competition slide is not really understood. And sometimes actually where there are no competitors, competition can be culture. It can be what people are currently doing, even if there isn't, a digital provider that is doing the same thing as you. So, and it's far too late down the line when you've built your technology and you're out trying to raise capital and approaching banks, and you haven't validated that actually this is I've built from the back end rather than from my perspective forward. So yeah, Cambridge is a bit of a unique spot, just given the university's presence. But having spent a lot of time in London, and I still live in London, I see a lot of digital businesses in and around the city as well. So certainly a massive trend.
Great, thanks. And Sharon, what's hot in Milton Keynes?
I have to be honest, I have to speak broader than Milton Keynes.
Fine, I knew you did, you just didn't fess up to it.
No, the thing that's hot in Milton Keynes is future cities. Milton Keynes has become a real test bed for future mobility and smart city technology in future cities. So if you're in the world of connected AI, robotics, we have last mile delivery bots, which are lifesavers when it's snowing and you don't want to go out to buy your pint of milk that you run out of. So from a Milton Keynes perspective, it's definitely smart cities, future cities, connected places, that type of thing. The interesting thing there is that we haven't had a massive shift in consumer behavior. So what we haven't seen, and actually the pandemic has shown us, but that's been down to lockdown, not down to the change of human consumer behavior, is people are still happy to jump into the car at the drop of a hat, because that's how Milton Keynes was built. So whilst the technologies are all coming online and we're getting some great apps and solutions, the bit that I think is still missing is how do you get people to adopt those technologies and make it part of real life? So that's Milton Keynes. In terms of general trends, e-commerce is not going anywhere. We all know that, and we've seen and heard enough sector reports and mainstream media news around the increase in e-commerce, and that will continue. What I'm seeing, maybe it's because of the world that we're in, is a massive shift and change on climate. And as a bank, actually, climate is a big focus of ours. We have launched a climate accelerator where we're actively supporting businesses that are there to help tackle climate change. But we are also building products and solutions that are actively supporting climate change. So that's in terms of the quota around how much lending we give and what proportion of our lending goes to climate savvy businesses, and equally how we stop funding businesses that are doing things that are detrimental to our climate. So we're looking at a multi-pronged approach there as an organization. And I've had the opportunity to work with some really exciting climate businesses from our region who are building game changer technologies. The exciting thing is it's definitely, like I said earlier, it's definitely the world of collaboration. People are far more open to working together and fixing problems and looking at problems in a project way. Because the other thing we have to understand is generally business life cycles have shortened drastically. More and more often we will see a business create, solve a problem and move on, and the founders retire and go off and do something else, and they work on the next idea and that next project. We don't see so many businesses that are being built to be handed down from father to son or mother to daughter and that type of thing. So that change in how we view business is really important. And then the next bit is well-being, mental health, huge increase in mental health. So med tech, I think, is definitely something that's going to be increasing. The really great thing is this pandemic has allowed us to bring solutions online that were always in the pipeline, but have just been turbocharged. And that's very exciting now because we've proven just how much we are capable of doing. And we, as a team, we're urging people not to slow down on that pace.
Julian, if I could just very quickly come in there, I'm conscious of time. I think all of those sectors are right. And if you look across our portfolio, and rightly or wrongly, we're now probably the largest limited partner investor in the marketplace. We try to give most of our fund managers the ability to be agnostic and follow what they perceive to be the growth sectors. So we approach it in a different way. We want our fund managers to make money because that means that we can pay government back for the money they've lent to us. And some of them are pretty good, some of them are pretty bad, but some of them are pretty good. That does not overcome the rest of the requirements of a good business model and a good team. So again, I'm very conscious that we probably all are guilty of attending the sectorally focused events. The issues still remain the same about management team, validation, knowledge of the marketplace. They don't go away just because it's a sector we're all very keen on. So that's the one thing I'm sorry to be negative, but that's the one thing I'd stress. There are sectors out there. They're often sectors that probably not people are talking about at the moment, if I'm being brutally honest. And that's the job of an analyst in the financial industry sector that we operate in, to identify those almost before, dare I say it, we don't. But again, the fundamentals have still got to be there for an investor to be interested.
No, thanks, Lewis. I think that's a really good point. Is there's no point in thinking there's a big opportunity in med tech if that's, to pick up on what Sharon and Ahmed were saying, if that's not your passion, because there'll be other people who have thought exactly the same thing and it will be their passion. So I think it's that whole thing about being clear about what the business proposition and why you're in it, and how you add value in the proposition you're offering. But I mean, I think it's just really encouraging that even in the midst of a really difficult time, all the evidence we've got is there are between 10 and 15% of companies that have actually done quite well out of it because they've seen an opportunity, either because they've been prepared or they've pivoted really quickly. And I think it's that whole area of well-being, digital health. I've heard people say I couldn't get anywhere near an NHS commissioning manager selling my digital health application. All of a sudden, I'm getting calls saying, "When can you come and see me? Because I really need it." So there are always opportunities out there, aren't there? We're nearly finished. We've not got any more questions in the chat room. If you do want to follow up with any of us individually, please use the functionality to do so. I'm more than happy to have a chat. I'm around tomorrow, or we can just arrange to have a one-to-one, and I know colleagues have indicated. So it just leaves me to thank you very much for attending, and in particular to thank Lewis, Sharon, Maxi and Ahmed for a really great presentation and discussion. I found it fascinating. I always learn lots because it's not my world, finance particularly. So I've learned a lot, and I hope you have too. So thank you all very much. Enjoy the rest of the afternoon and look forward to seeing at least some of you, if not all of you, for the discussion we've got tomorrow morning on skills. Thanks a lot, everyone. Take care.
Thanks, Julian.
Thank you.
Keep safe, everyone.
Bye.